right, traders and investors, this is Vishal from EQUITY.GURU, and a lot to talk about this week, actually. There's anticipation for this Fed meeting on Wednesday. The Federal Reserve did raise interest rates by 25 basis points. We had a bit of a hiccup with regional banks, but you'll see the amazing recovery at time of recording. We're recording this on May 5th, which is a Friday, and this is also post non-farm payroll. So we'll take a look at what the U.S. job numbers show us. And, the markets on the technical charts continue to just maintain the range, which, we've been talking about multiple times, on Chart Attack in recent weeks, just because this range is just not breaking and we're just waiting for direction. And you can see, markets are up big today. A very big, strong bounce here at our major support zone here on the S&P 500, just as we saw actually last week on Thursday, April 27th. So I see this more of just, traders or algos playing this range. And the big test, obviously, is if we can get a breakout above the top portion of the range or the resistance level, which, just looking at past price action, huge green candle did not lead to a breakout of the range. And, we'll see if next week we can get that breakout. Nasdaq, very similar, although there could be a breakout confirmed by the end of the day, largely thanks to the earnings from Apple. So we'll see what happens. And if we can get that close, and at time of recording, we are testing that upper portion of resistance, and we still have some time left in the trading day. And then the Dow Jones, just once again, it did break down, tested our moving average, but amazing recovery here. So this one might, point at markets doing a fake out and potentially breaking out to the upside there. And the Russell 2000, not much can be said, although it is bouncing from a support level on that range. So I would be watching the Nasdaq, I would be watching the Dow Jones, but we are still waiting for those ranges to break. What about from the Fed? What did the Fed tell us? Well, it was the Fed's 10th interest rate hike in a row. A lot of the market was expecting them to mention some sort of pause. They didn't really say they're going to pause. However, the financial media is sort of saying this is, a hawkish pause. Because of certain statements that were left out of this FOMC meeting. And you can see, this is what people do. They cross out all these words that were basically in the past FOMC meeting article. And from this, they can tell if the Fed is being hawkish or dovish. And in this case, Powell did, he said that a decision on a pause was not made today. But the omission of a statement, which has been in multiple Fed statements, is the committee anticipates that some additional policy firming may be appropriate. So that is now gone from the new Fed statement and has been seen as the Fed essentially pausing here, right? So again, hawkish pause is what I'm saying, and the financial media is saying as well. And it sort of keeps the door open, right? So the Federal Reserve is in between where they can, keep raising rates if they have to, if they see inflation numbers are coming up higher, or they can pause if, for example, higher interest rates are affecting the banking sector and causing some issues there as well. And again, folks, a pause doesn't necessarily mean a reversal and cutting rates, right? That's what the Fed said, that they're not looking to cut interest rates anytime soon. Rates will have to be higher for longer, which is sort of interesting given we looked at the Fed futures, with some of the market participants expecting possible rate cuts near Q4 this year based on recession. Earlier this week, we had the Reserve Bank of Australia, which is the Australia Central Bank. They did pause, right? They did pause a month ago. However, they did unexpectedly, shockingly raise interest rates on, this week, right? Even when they announced a pause, of course, the Bank of Canada announced a pause as well. So I just want to remind, viewers that a pause isn't necessarily meaning they're stopped, that they're going to, obviously the central banks are going to act on the data, and the Australian hike was more due to like the domestic inflation that they saw there, right? So just keep an eye out on that. Obviously, the CPI number is always going to be important. This is interesting, right? With the job data, and of course, the Fed has always been saying that the the NFP employment data is very strong in the U.S., which doesn't really hint at any signs of a recession. And we saw that there was a broad gain across April non-farm payrolls, and expectations were topped, right? It increased by 253,000 jobs in April, more than the estimate of 180,000 jobs. So very, very strong employment NFP numbers. You can see where the job 1 month net change came from. This is interesting because if the job numbers keep coming out stronger, technically, if inflation does still begin to turn up because of the inflation data, because of the employment data, the Fed could still get away with, raising interest rates, saying that, we're not in a recession or in an economic slowdown because the job market is very, very strong. But again, that's, thinking forward. We'll keep a look at the CPI data as it comes, just like the Fed is, they're acting on the data. But as of now, hawkish, pause. A lot of questions, of course, asked to Powell about the banking sector. And he did actually mention that the banking system is sound and resilient. And then post-market, we saw a huge plunge in the regional banks, including Pac West, which was looking at strategic options. And this is something that we saw with First Republic, of course. So a bit of fears there. And in past articles, we have been looking at IAT, which is the U.S. regional banks ETF, and we have mentioned that there was this range which developed after the events in March, and there was a breakdown recently this week, and a continued move lower. So as long as this downtrend, still continues from a technical analysis perspective, there's possibly still more headlines that we could be seeing from the regional banks. So keep an eye out on this. We are very, very strong today with a recovery rally here. We'll see what happens when we retest the broken support now turn resistance, and if we will fall back lower. You can take a look at the heat map here of the S&P 500, green, 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 even the financial sectors and the banks, all very, very strong. Pac West, of course, was the bank that was down post-Fed meeting. It was down over 50% post-market. Recovery as well, right? Very, very strong recovery here, an 84% gain for the day at time of recording. So a very, very strong recovery. But as I said, from a technical perspective, very similar to that chart of IAT, where this could just be a pop-up higher to retest the broken support zone. And we'll really find out next week if the buyers can bid the price back up to nullify a technical breakdown, or if the sellers will step back in again, possibly creating more of these banking or regional banking headlines, and we retest and head down lower. So a lot of things discussed this week. As I said, there's this banking issue, which is still maybe creating fears. We saw the third bank failure this week to kick off the week since March 2023. And a lot of people are, watching the regional bank charts here. So we'll see if those headlines develop. The Fed, hawkish pause, markets, of course, just ranging here. And now it seems that going forward, the trade is going to be not raising rates and inflation, but possibly, recession, right? Recession data. Is there going to be a recession coming? We'll take a look at the corporate earnings data, and it's still coming out a bit mixed, with some companies doing, much better than others. And we'll also have to look at the employment data, which, still continues to be quite strong going forward. And I think that's just caused a lot of, I don't want to say uncertainty, but, the markets are just trying to figure out direction, right? So many factors out here right now. And I say that because when you see a range, that's typically the type of sentiment that you see in the markets, right? So we're still waiting for that breakout in either direction, although at time of recording and on the day that we're recording, very, very strong recovery, but it's too soon to be said that this is a technical breakout because we are waiting for the candles to close. But that's it for me, folks. Let me know in the comments below where you think the markets are going to be going next. Will we be breaking out of these ranges? Or do you think some other headlines, maybe from the regional banking side of things, will cause fear and a risk-off sentiment to return and markets to sell off and break down the support zone from here? I really want to know what you guys are thinking. Be sure to follow. Be sure to give this video a thumbs up, and I'll catch you guys all in the next chart attack video.